unexpected boost last quarter. That's according to the latest gross domestic product report just released by the Commerce Department. The initial reading of a third quarter GDP report showed the U.S. economy grew at a faster pace than expected. The 4.3% rate is better than the second quarter rate and the fastest growth rate in 2 years. Consumer spending and exports were the main contributors to the strong GDP reading, which got delayed due to the government shutdown. But some government officials are now praising President Trump for the new growth, but others are saying not so fast.
These numbers are showing that President Trump's trade policy and his supply side policy, which is really increasing factory production and so on, is having a big effect, as is his trade policy.
I do think, however, that growth is good, and that number is an excellent number. I'm curious how much of it is consolidated in a handful of industries and companies. Specifically, the AI boom is something I think we're all concerned about.
The report likely means the Federal Reserve has less need to cut rates to support the economy when it reconvenes next month. So what do consumers say about the economic picture? A recent survey says consumer confidence is at its lowest point since April, when President Donald Trump introduced his Liberation Day tariffs. Nonprofit research group Conference Board says consumer confidence fell almost 4 points from November to 89.1. A score below 100 means shoppers have a negative view of the economy. The monthly report showed consumers' views of their family's current financial situation dipped into negative territory for the first time in nearly 4 years. Consumers across all income levels also expressed concern about the labor market. The unemployment rate recently reached a 4-year high.